Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So firstly, as we go into a new week here, well done to everybody who managed to capitalize on the previous pullbacks that we got after Friday's non-farm payroll data just over a week ago. We had many comments again on the YouTube channel for those of you that were able to buy in sub 1700, 1680, 1690 and so forth. In fact, we executed the trade at 1687. We banked 500 points on that after the FOMC statement on Wednesday. We still have a position running on gold, which into the close on Friday is up 430 points, with gold of course going up 2.3% last week. Now, we did see a gloomy outlook from the US Federal Reserve on Wednesday. With that, we've subsequently seen a significant pullback on US stock markets, the S&P 500 having the biggest one-day sell-off since March. And overall, as we go into a new week here, there are some key levels that we're looking at on gold going into next week. We're watching the US dollar here very closely going into next week, because if we do get a breakout and a further retracement higher, this will very likely put pressure on gold priced in US dollars. So with that, let's actually move over to the charts and we'll talk you through exactly what we're looking at here as we go into next week. Now, first of all, moving over to gold, as we mentioned in last week's week ahead commodity report, you want to watch out for these great buy opportunities on gold after non-farm payrolls where you have a significant decline on those news items. Often what you'll see is the following week is a full-on retracement on the Monday, and in fact last week we had no counterflow on Tuesday or Wednesday, as we had mentioned again on last week's report that expect a retracement higher after the big sell-off that we had on non-farm payrolls. So we executed back in for a new long position here at 1687. That's been perfect in the last week here, breaking out 500 points, banking us a lot of profit on that trade. And then essentially we're keeping some of our exposure here into a new week, but I am looking at pullbacks again next week as buy opportunities. So what I'm expecting going into next week, especially as the dollar is starting to pick up momentum right now, we have silver which is starting to roll over. We also have pressure to the downside on platinum right now. It wouldn't be a surprise for me to see here gold pull back over the usual counterflow at the start of the week. We have a bear flag here. We may be able to gap higher slightly off the open here, just given that there's been more riots again this weekend in the USA, in the UK, and with that you may see a bit of further uncertainty here into the open. Often that can provide a bit of an additional bid for gold, and we may see it gap slightly higher. But then I would look out for the potential of a pullback here on Monday, Tuesday, Wednesday, especially if the dollar does pick up momentum. Gold price in US dollars would then very likely pull back, and this is where you'd have a bear flag, the potential to pull back into key levels of support here, so back within the consolidation that we've seen recently, and essentially more range bound trades. So I would look at that if we do get a revisit back towards sub 1700 essentially. So if gold gets under 1700, we may well see a revisit back towards those previous swing lows, but essentially as soon as we get back below 1700, I'm getting interested in building further positions on gold. We banked a lot of profits last week. It's been a tremendous 500 point breakout in just a matter of 3 days there off the back of the non-farm payrolls. That worked out perfectly. So this is the expectation going into next week, that we could get some pressure to the downside, some counterflow at the beginning of the next week, and then below 1700 I'm interested in building further positions there. And of course I'll be looking for buying evidence. The lower the price gets, the better really. As you know, we're always just trying to sniper in and get the best possible price, and then I'm expecting range bound price action. And then later on in the month, in June, I am looking for a potential test back towards the upper end of the channels again here for gold. So essentially range bound price action, but be mindful that we may see some vulnerability at the start of next week. So then let's just bring you over to silver, and you can see where silver is starting to break down, negative almost 1% on the day here on Friday. It's got some pressure to the downside. The gold to silver ratio has started to uptick as well. It's broken back out towards 98 to 1. And when the gold silver ratio is going up like this, it tends to put pressure on silver more so than gold. You have to remember that silver over the month of May was up 25% in a single month here. Now we're obviously seeing some profit taking come into silver, and the gold silver ratio is picking up momentum. Normally gold as well does outperform silver over the month of June, so just be mindful of that too. Then if we have a look at platinum here, platinum has also started to roll over in the latest week. It's down 1.7% in the latest week, but so far in June, it's down 5.7%. So platinum is certainly under pressure here right now. You could also have a look at the gold miners here for some correlation too, and GDX at the moment is also looking under pressure here. We've got a potential bear flag, and if we were to roll over, particularly at the beginning of next week, if we see stock markets under further pressure and ultimately the US dollar picking up momentum and gold priced in US dollars under pressure, we could see a further sell-off for GDX, which is the gold miners here. So it's another correlation just to bear in mind going into next week. And then finally, if you look at the dollar here, the dollar has found a base at 96. We've had a couple of days of upside here. We've actually got long positions on the dollar, which are moving really nicely there into the close. And what I'm looking at as we go into next week would be the potential for more dollar strength, which will put pressure on gold priced in US dollars, but only in the short term is what I'm looking for there, because I am looking for pullbacks in price back below 1700s as opportunities to add further positions on gold for more range-bound price action over the course of June. Then with that, let's just move over to crude oil as well. So crude oil so far over June has sold off 9.5%. This, of course, is after a tremendous run here where it's actually come back up to fill the gap going back to the beginning of March here. We've broken out to 40 US dollars per barrel here, which is what we discussed previously, that we were looking for a test back towards that magnetic level. And then from a test of that $40 per barrel level, we wanted to see whether we were going to see crude oil be able to close above that zone and potentially then start to make a further acceleration higher. We've seen a failed breakout at that level, and we have subsequently seen a revisit back towards 35 US dollars per barrel, but support coming in at that zone there on Friday. Hedge funds and money managers, they have increased their net longs again in the latest week on crude oil. They've reduced their sell shorts. In fact, whilst I'm mentioning that, with gold, we have seen hedge funds and money managers in the latest week, they've reduced their net longs on not only gold, but also silver. So just be mindful of that. And of course, silver is under some pressure right now. So far in June, it's down 3%. And we're seeing a little bit of pressure here as well on gold for the month. It's down a little bit, down 0.5%. Although the latest week, gold has been stronger. And I am anticipating gold to be stronger than silver throughout the whole of this month of June. So bringing you back to crude oil here, what I would look at is it could actually be a temporary pullback here, just given that the overall positioning from funds right now is very much on the bullish side. I would watch out for that. If we were to break back above Friday's highs here, get a continuation pattern, it could be a revisit back towards $40 per barrel. I suspect we're going to continue to ricochet and consolidate between $35 to $40 a barrel. A break and a close below 35 does open the door up for a revisit back to 30, and a break and close back above $40 per barrel, of course, then opens up the door for a breakout back towards the upper end of the channel here, which would take the price back towards 45 US dollars per barrel. So I would watch out for that going into next week. Of course, you want to also keep an eye on Tuesday's API data and Wednesday's oil inventories, which can typically be a huge catalyst for big moves here in the crude oil market. As I mentioned at the start of the video, well done to everybody who was able to capitalize on the move there that we got the previous week, because what you didn't want to do is be FOMOing at the top here. You want to keep buying on these significant pullbacks on gold. It really provides an opportunity to generate profits very fast. Now, of course, the beauty of the research-driven approach to the markets that we utilize at the Gold and Silver Club, it means that you're not constantly getting chopped up in the markets from many of these retail traders who are trading 100% purely technical analysis, which absolutely doesn't work in today's market conditions. Strategies that may have worked a couple of years ago, they're not working in today's market conditions. You need a lot more edge than that. This is where a research-driven approach to the markets is going to help you massively, where you're then looking into cycles in the market, into market correlations. You're adding to that seasonality, the positioning them from hedge funds, money managers in the markets versus the retail traders, which are predominantly trading in the wrong way, where they're getting chopped up or they're missing out on trades entirely. Alongside that, you of course want to be looking at macroeconomic data, fundamentals, and align that with our in-house market intelligence. And this is where you're going to have a strong edge in the market. And of course, the real benefit of trading too is that it is recession proof. The impact of COVID-19 has been that many central banks around the world have cut interest rates over the last 3 months. We've also seen the Federal Reserve and other central banks around the world create unprecedented amounts amounts of fiat currency, which of course has a knock-on effect further down the line where not only your currency is being devalued, but also interest rates in the bank have also lowered. That means, of course, that your capital in the bank is going to earn even less interest now. So that's where you want to really take control of your wealth, your finances, where you're then in the driving seat. Then you can compound your returns via trading. So with that, if you would like to learn a research-driven approach to the markets and join a community of successful traders, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You have access to real-time trade alerts, trading research and market insights, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.